Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. But first, let's have a look at the Forex sentiment meter. And here is our beloved gold USD here. And as you can see that only 28% retail traders, yes, the sentiment meter shows the position of the retail traders, not the big players. So only 28% are on the sell side and 71% are on the long side. It means that they have taken or they are holding the buy positions. And here you can see the average short price is 16.192. So those who are holding a short position, they are in big profit right now, and those who are holding the buy position are in huge loss right now. My dear friends, you must understand one thing very well, that market has only one rule, and that is follow the trend. Right now the trend of gold is not towards the upside, it is towards the downside. Gold is bearish. So as a result, following the trend of the market, if you are holding a buy position or if you are holding a position against the trend of the market, then please come out, because it's your hard-earned money. Try to protect your hard-earned money. If you stand against the trend of the market, it means that you are gambling with your hard-earned money unknowingly. Please respect your capital, protect your capital, and try to follow the trend of the market right now. So this will be a long video, detailed video. If you are busy right now, if you're doing something, then please watch the video when you are free. Okay, so let's have a detailed look at the chart of gold. So today I'm in the weekly time frame. This is the weekly time frame of gold here, and as we can see that gold is right now standing at 1668, and we had a big support around 1680. We all know it very well that 1680 was a very strong support for gold, but right now gold is trading below the strong support of 1680, and gold is right now standing at the 200 moving average. The red line is the 200 moving average. If you are a trader, if you have considerable experience in the market, then you know it very well that around the world we have seen, or we see, that 200 moving average has a very respectable position. So whether it is stock market, commodity market, doesn't matter, in every chart of the world, okay, gives a special respect to 200 moving average, and right now we can see gold is standing at a 200 moving average. So if market succeeds, then we may see a bounce from here. Okay, listen to me carefully. If market bounces from the 200 moving average, then there can be a bounce from here. Okay, and if market fails to bounce, if the 200 moving average fails to bounce, after all, one thing we must understand very well, that whenever there is a battle between fundamentals and technicals always lose the battle. Okay, let's say a news comes out and the news puts more pressure on gold, then obviously gold will not be able to bounce from here, and we will see further downside. In that case, if gold slips below 1650, if you see heavy selling below 1650 level, then obviously it will be clear to us that the support of 200 moving average is no more valid on the weekly chart, and 1600 will be the next target for gold. So those who are looking for swing trading opportunities or positional trades, I'm not talking about daily traders, okay, for swing traders, positional traders, if gold moves below 1650 level, you can go for a target of 1600. Okay, so this is the weekly chart. Now let me take you to the daily chart of gold. Let me remove the drawings. This is the 1 day time frame of gold. See, on the 1 day time frame, you can see that right now the trend of the market is very much bearish. Sellers are dominating this market right now. So as you can see that we have a wedge pattern here. on wedge pattern on the daily time frame. So if market takes support around 1650 or somewhere around here, because right now we do not have any proper strong support. So if market following the wedge pattern, if market bounces from this particular level of this chart here, then we will get the understanding that yes, the 200 moving average on the weekly time frame is doing the job, because at the same time the falling wedge pattern will be giving us an upside on the chart of gold, and at the same time the 200 moving average will also be acting as support. So can you connect the dots right now? Okay. From daily time frame, we do not have any strong level right now, but we have a possibility that yes, there may be an upside on the chart of gold as well. Now we are back to our usual 4 hours time frame. So swing traders and positional traders, you can consider the analysis on the higher time frame, the daily time frame and the weekly time frame. And the day traders, you should be focusing mostly on the time frame of 15 minutes, 1 hour and max to max 4 hours. In fact, for day traders 4 hours is very slow. Okay, still you can consider. Okay, now day traders, let's have a look at the levels for the day. First of all, as you can see that right now market has formed a red candle. Okay, right now market has formed a red candle. If you take a buy position here, okay, if you take a buy position here, then you can see that you do not have any proper support. You do not have any proper support, so obviously your stop loss will be somewhere around here. So 1660 buy position and 1653 or 1652, so a stop loss of around 200 pips is not possible, isn't it? So buy position or long position is out of the question. Okay, and if you're planning to take a sell position also, okay, so if you're planning to take a sell position also, okay, again there is no proper level here. Okay, your SL will be somewhere around here. So again you are messing with the risk management. So what I'm trying to tell is that if you take any position here, then it will be like gambling with your hard-earned money, because the risk to reward ratio is not in your favor. Maybe you will be earning money today and tomorrow, but in the long run you will end up losing big time. So my dear friends, if you're new to the market, then please follow the discipline, because discipline is the only thing that will help you to survive in the market. Without discipline, it's not possible. So never ever enter in the middle of the chart. Okay, so this is not the right position to enter in the market. So what you should be doing is that you should be waiting for the right levels. See, right levels for the days for today or tomorrow are 1657. 1657 is the first support for the market, and as I have already stated that on the chart of gold, as the market is already bearish, we do not have any strong support. So please follow proper risk management and do your calculation. Do not gamble with your hard-earned money. I'm repeating again and again. So 1657 is the first level. If market comes down, okay, if the volatility is normal, if the market is not extremely volatile, if the selling pressure is not very high, then you can expect the market to bounce from 1657 level. Okay. If market bounces from 1657, you can consider a buy position, take a buy position, and you can expect, at least you can expect a movement of 40 pips. Okay, if not trend reversal, at least you can expect a movement or upside of 40 pips. Okay, and in case the selling pressure is high enough, if the selling pressure is high enough, then the next support level will be around 1653 to 1650. Why we are considering this level here? Because you can see that from 1653 market has shown some sort of price rejection, not a very strong price rejection, some sort of price rejection. So it shows us that yes, some buyers are present around this level here. So yes, again we can expect a upside of 40-50 pips if the selling pressure is not high enough. If you see market taking support around this level, if you see the market is showing price rejection from below, hammer kind of a pattern, and the selling pressure is also not very high, then you get the confirmation that okay, market is somehow trying to take support and you can consider a buy position. But in case the selling pressure is high enough, if you see that market is approaching these levels by forming this kind of big red candle, then obviously you should be avoiding buy position. After all, these levels are not permanent. No level is permanent in the market, but our capital is limited. Okay, so we must be very, very careful. So, and in case, as I have already stated, that if market breaks 1650 level, okay, and if the selling pressure is high, then yes, there may be a big sell. Okay, then you can consider a sell position. Okay, because a fresh sell may come in the market. Okay, but as of now, for today, 1657 is the first level from where we can expect a bounce. But keep in mind, this is not a strong level. No strong support is present on the chart of gold, and the second support is 1653 to 50. Do your proper calculation and maths. And on the other hand, if market goes up from here, let's say by during the evening time, if we see market going up from here, then yes, we have some resistances as well. First resistance is 1680 level. 1680 is the first resistance, and considering the present condition of the market, okay, there's a possibility that market will face trouble to go up. And if market reverses from here, then you can take a sell position. 1680, then we have got 1685. This is the second resistance. Then we have got series of resistances, बहुत सारे resistance है. Okay, then we have got 1694 to 95, and then we have got 1700 to 1702. So 1680 is the first resistance, 1685 is the second, 1694 to 95 is the third, and 1700 to 1702 is the fourth resistance. So these are the resistance you need to observe. Okay, try to understand. You need to observe the market at each and every level. So if market goes up and reverses from the resistances, then only you should go for a sell position. After all, it's our hard-earned money. So sell at resistance, okay, because overall the trend of the market is very much towards the downside. Market is bearish. Okay, and if market bounces from the support, we should be careful and consider a buy. But in this market condition, following the trend, taking a sell position is better. Okay, so this is it. This is my analysis. I can be wrong as well. Please follow your proper risk management, do your maths correctly, calculate the position accordingly, because it's your hard-earned money. It's your responsibility to protect it. Bye bye, take care.